10 minutes ago, the financial world changed. I was at my desk doing my usual evening scan of SEC filings when I saw something that made me stop breathing. Warren Buffett's Berkshire Hathaway just filed a 13F amendment, and buried inside that filing is a position nobody is talking about yet, because nobody has seen it yet. $2.8 billion in silver mining stocks, Warren Buffett. The man who famously said gold is a useless asset. The man who has avoided precious metals for decades. That man just made the largest precious metals investment of his 60-year career. And you are finding out about it right now on this channel, before the big news networks, before the algorithms pick it up tomorrow morning. This is not clickbait. I am going to show you the actual filing, break down exactly what he bought, why I think he bought it, what it means for silver, and what it means for you. Welcome to Money Untold. If you're new here, we tell you what the mainstream financial media won't. We dig into filings, we analyze data, and we do it before everyone else catches on. Subscribe right now and turn on notifications, because if you're watching this video 12 hours from now, this news will already be everywhere, but you found it first. Let me show you what I found. At 4:47 p.m. Eastern Time today, Berkshire Hathaway filed an amended 13F with the SEC. For those who don't know, a 13F reveals a firm's equity holdings. But this wasn't a regular filing, it was an amendment. That means Berkshire requested confidential treatment for these positions when they originally filed. Why? The SEC allows this when an investor is still building a position and doesn't want the market to front-run them. Buffett did this with Apple. He did it with Occidental. When Warren Buffett asks for confidentiality, it means the position is significant and he's not done buying. Here's what the filing shows. Berkshire now holds positions in 3 silver mining companies totaling over $2.8 billion. First, Pan American Silver. 42.7 million shares worth about $1 billion. Second, First Majestic Silver, 58.3 million shares worth around $847 million. And third, Wheaton Precious Metals, 19.1 million shares valued at $963 million. Combined, that's a massive bet on silver. Now, that might sound like a small part of Berkshire's huge portfolio, but 1% positions are how Buffett starts. Apple started small, Bank of America started small. When Buffett puts $2.8 billion into anything, it's a signal. When he puts it into silver mining specifically, it's an earthquake. So why now? What does he see that others are missing? The story here is deeper than just a simple commodity bet. The demand for physical silver is exploding, not just for jewelry or investment, but for industrial use. Solar panels, electric vehicles, 5G technology, they all need silver, and supply is getting tighter. Buffett isn't just buying silver, he's buying the companies that pull it out of the ground, giving him leverage. This isn't about him changing his mind on gold. This is about industrial demand, supply constraints, and a massive shift in the global economy. He's not just betting on a metal, he's betting on the future of technology and green energy. This move signals that he believes the price of silver is fundamentally undervalued. So what should you do? Well, I can't give financial advice, but when the world's greatest investor makes a move this big, in a sector he's ignored for 60 years, to understand what's happening now, we need to look back. Because this isn't the first time Buffett has gone big on silver, and what happened last time is crucial for figuring out what might happen this time. Back in 1997, Warren Buffett absolutely stunned the investment world. He bought nearly 130 million ounces of physical silver. That was almost 20% of the entire world's annual production. He paid about $4.50 an ounce, spending around $600 million. The market went ballistic. Silver prices shot up, and analysts were left scratching their heads, wondering why the world's most famous value investor was buying a commodity he'd always ignored. So, what did Buffett say? In his shareholder letter, he wrote, and I'm quoting here, "We had a significant investment in silver. Equilibrium between supply and demand was only likely to be established by a somewhat higher price." That's it. Classic Buffett understatement. But the message was crystal clear. He saw a supply and demand problem that the market hadn't noticed yet. He held that silver for almost 9 years, selling it in 2006 for about $7.50 an ounce. He walked away with a respectable $400 million profit. Not his greatest trade ever, but not bad for a commodity. But here's the part everyone forgets. Buffett sold in 2006. By 2011, silver hit nearly $50 an ounce. If he had just held on, his $600 million investment would have been worth over $6 billion. Buffett himself later admitted it was a mistake to sell early. In an interview, he said, "We should have kept it. The fundamentals I saw in 1997 only got more pronounced." Now ask yourself, why would a man in his 90s, who openly regrets selling silver too early, suddenly pour billions into silver miners? I believe he sees something much, much bigger this time, and I think I know what it is. Let me walk you through 5 reasons why Buffett might be making this move right now. This is my own analysis, based on public information and my understanding of how Buffett thinks. First, the supply and demand imbalance. In 1997, Buffett saw it emerging. Today, it's not emerging, it's screaming at us. In 2024, global silver demand was 1.21 billion ounces. The amount mined from the ground, just 830 million ounces. That's a 380 million ounce deficit. It's the fifth year in a row we've used more silver than we've mined. The total shortfall over those 5 years is over 800 million ounces. So where did all that extra silver come from? From stockpiles. Vaults in New York, London, and Shanghai. And those stockpiles are now at their lowest levels in decades. Buffett reads balance sheets better than anyone on the planet. He sees that the silver market is running on fumes and he's getting in before the shortage becomes a full-blown crisis. Second, silver's new job. In 1997, silver was mostly for money and jewelry. Industrial use was there, but it wasn't the main driver. Today, silver is critical infrastructure. Solar panels need silver, about 20 grams per panel, and solar installations are growing 30% every year. By 2030, solar alone could demand over 500 million ounces a year. That's more than half of what we currently mine. Electric vehicles need silver, AI data centers need silver, 5G towers need silver, the military needs silver. Buffett has huge investments in energy, so here's a question a lot of you might be asking. Back in 1997, Warren Buffett bought physical silver. Now, in 2026, he's buying silver mining stocks. Why the big change? I have a theory. Let's rewind to 1997. Buffett was managing a much smaller portfolio. Deploying $600 million into physical silver was manageable. He could handle the storage and logistics. Fast forward to today, Berkshire Hathaway manages nearly $300 billion. To make a similar splash, say $2.8 billion, he'd need to buy over 30 million ounces of physical silver. That's 4% of the entire world's annual production. Trying to do that without sending the market into a frenzy would be nearly impossible. But buying mining stocks? That's a different game. He can accumulate his position quietly. He can use dark pools, which are private exchanges where institutions trade large blocks of stock without revealing their intentions to the public market. He can even request confidential treatment from the SEC to delay the disclosure of his holdings, and that is exactly what he did. There's another huge reason, though. It's a single word: leverage. When the price of silver rises, mining stocks don't just rise with it. They often outperform dramatically. Let's run the numbers. Imagine silver goes from $80 an ounce to $150. That's a solid 87% increase. But think about a silver miner with production costs of $30 per ounce. At $80 silver, their profit margin is $50. At $150 silver, their profit margin explodes to $120 per ounce. That's a 140% increase in profitability. For a long-term value investor like Buffett, this is ideal. He's not just trading a commodity, he's owning the businesses that produce it, getting leveraged exposure without the complexities of futures or options. So, what does this signal for the future of silver prices? I want to be very careful here. I'm not making a prediction, I'm offering analysis based on history. When Buffett bought physical silver in 1997, the price was around $4.50. By the time, here's how I'm thinking about this personally. First off, I'm not changing my core strategy. I believe in physical silver ownership as a long-term store of value, and that has not changed one bit. Buffett buying miners doesn't make physical silver any less valuable. If anything, it just confirms the fundamental thesis. Second, I'm reconsidering my allocation to mining stocks. I've historically held about 80% physical and 20% in miners. Now, I might shift that closer to 70-30. This isn't because I'm just chasing Buffett's trade, but because his filing forced me to re-examine the value proposition of miners at their current prices. And honestly, they are genuinely cheap right now. Third, I'm getting ready for some volatility. When this news really goes mainstream, you can bet that silver and mining stocks will move. It'll probably spike up first, then we'll see a pullback as traders take their profits, and then a slow grind higher as the big institutions start building their positions. That's the typical pattern we see after these major Buffett revelations. So, what does this mean for you? If you own physical silver, this filing is pure validation. You were right before Buffett even confirmed it. Don't sell into the excitement. Just let the thesis play out. If you own mining stocks, congratulations. You might see some significant gains this week. Think about whether you want to hold through the volatility or maybe take some partial profits off the table. And if you own nothing, please do not FOMO in at the top of tomorrow's spike. Wait for the pullback. Buffett didn't just buy this morning. He's been buying over the past several months at lower prices. You don't have to catch the exact bottom, but you do need to be positioned for the long term. Let me leave you with this thought. Warren Buffett has been investing for over 60 years. He's seen every market cycle, navigated every crisis, and he's made and kept more money than almost anyone in human history. Now, at 94 years old, with absolutely nothing left to prove, he just made a $2.8 billion bet on silver mining. He's not doing this for short-term gains. He certainly doesn't need the money. He's doing this because he sees something in the data that tells him silver is incredibly undervalued relative to its future importance. These are the same fundamentals I've been covering on this channel for years: the supply deficit, the surge in industrial demand, the China restrictions, and its designation as a critical mineral. Buffett just validated all of it. I started Money Untold because I believed there were truths about money and markets that the mainstream simply wouldn't tell you. Today, one of the richest men in history confirmed one of those truths. Silver matters, and the people who are paying attention are going to benefit. Subscribe to this channel if you want to keep getting information before everyone else. Share this video right now before the news breaks tomorrow so your friends and family can see what's coming. Drop a comment below and tell me what you think about Buffett's move. Are you buying miners, sticking with physical, or are you skeptical? I read every single comment. And I'll see you in the next video. This is Money Untold. Now you know